So yeah, so since it has a strong buy analysis, let me check second. Volume for today was 41 million, 41.9. The average volume for it was 31.8 million. And the volume is still increasing after hours, right? And again, like I said, it has a short-term outlook rating, also strong, good outlook rating on it. The implied volatility is looking okay, so we know something is happening because the implied volatility is 50% higher than it. I mean, 50% higher than it was a year ago for the same thing, right? 1 second. The 5-day change, plus $8 today. Now this is the real shit right here. All right, let's look at the options prices. That's all I really care about, right? So let's check. We're gonna look at all the contracts, not just the near the money ones. Now the put to call ratio, you saw that though. Hold up, let me go down here first. It's more call volume than put volume. And open interest on call to put volume. This is crazy. So now let's go. So in terms of strikes, it's sitting at 30.4 right now, right? So yeah, so we'd obviously looking at something up here. I would say I'm looking at the volume and open interest. The first thing that sticks out is this 35.
I did peep that though. I saw it.
35, and that one is going for, the last price was $99. Oh damn, for real? Okay, that's not bad. $99 for that play. It's all that open interest in it, all that volume. I'm glad you
I
brought
think
this up. And it's
I think
down.
that expiration was yeah, when was that? That was next week. Let me see.
Yeah, we're looking at, well, it's not, I'm gonna get down. I'm going to next week. I just wanted to kind of
Oh,
see
you
what,
just looking at everything. Yeah.
yeah, I'm just trying to, just trying to build a case, we just trying to, so people can learn how to really build cases on this stuff. So yeah, so looking at that, and I'm gonna look at the, so somebody knows something, right? It's already at 30. This one was plus 20% today. Now keep in mind this one was plus hold on, what is that? The change. Yeah, change. Now let's go down to I want to switch to a different time frame now. Next week. All right. So go up to the same time frame. Now you can see because of the expiration how the price changed by like $300
Mm-hmm.
for this play. Well, not
Yeah.
really, not too bad. It's like $200, but still. Um, yeah. So this one it has a lot of volume for today. Well, not as much as the other, but it has some open interest in here. I'm thinking also the fact that it's cheap has a lot to do with that volume being that way. Also, let's take a look at the Greeks though for these plays. See what the Greeks give us as far as best plays and volatility, right? So um, forget these near the money. Let's just, yeah, they cool. They all near the money anyway. Um, yeah. So the implied volatility 211. Now keep in mind this is still the one for, yeah, the 26. Looking at that one first.
Yeah.
Yeah, IB 211, Delta is 41. Okay, cool, Delta. Gamma, the rate of change is, that's all right. It's $3. Um, Roll don't really matter right now. Interest rate thing going on. That's pretty cool. Theta is 19. That's kind of, it's not too bad because again, after the first dollar, you're good. And I mean, but it's all about how much we think it's gonna move. And the Vega is $2, which is something of the most important thing that I've seen on this whole thing is that this Vega is $2 because if the implied volatility, the historical implied volatility shows that a year ago on this exact date, the implied volatility is up 50%, an additional 50%. than it was last year on this day. So that means this play is up an extra $100 based off of implied volatility. You know, 2 times 50, that's 100. So extra $100 is added to the options price. And I ain't saying that I'm just basing that off of a year ago. I'm not basing it off of anything else. Now the implied volatility would be high because if New York legalizes marijuana, that's going to set that's for our side over here.
It's a big thing.
And he ain't talking about that's going to be that's big for the East Coast. That's going to be the biggest state on the East Coast that has legalized marijuana. Because the
That's
only
what I was saying. That's why I was looking eyeing that news because
you got
I
to
mean I got it too late, but when I seen that New York set to like a trend for like other states to follow, so that's a good
exactly
one if they
because
catch
you
it.
got California obviously, then you got Denver out there in the Midwest,
You got
and then you
Canada
got
and all that.
Nevada that did what it did. But you know, but yeah, so I think we looking good, man.
Colorado either.
What you say, Makira?
It's like you can't forget Colorado because really they was the first.
Yeah, that's why I was saying Denver. Denver, that's Midwest, but I'm saying like, yeah, they did it big. But I'm saying like on the East Coast though, right? So East Coast wise, we don't have no state over here, that's substantial like New York. Because once New York does it, and Governor Cuomo and Mayor and Governor Hogan, they tight. You feel me? So I feel like if Cuomo does it, then Hogan gonna say, "What the fuck?"
It's
You
the
feel
same
me?
thing. Yeah.
Yeah.
It's
So
gonna
I
reach.
just it's gonna be we need something like that on the East Coast because again, you got the West Coast already doing their thing, and you got the Midwest, but Cuomo doing it, and I think he's gonna do it because that's gonna take the heat off of him and everything else that he got going on. So
That's a
that,
fact.
and it's just like I just feel like it's gonna happen. It should have been happening. And then on top of that, the taxes, all of the revenue that was lost from COVID in New York, that's gonna recoup a lot of money, a lot of funds. And then
That's
those
what I'm thinking.
dispensaries won't be able to just overcharge what they do. That's a whole different situation though. But it'll open things up because you can grow because once it's legalized, you can grow it, you can gift plants to other people, you can do all types of things when it's legal. And
Yes, that's what I'm excited for. Growing it.
yeah,
Talk
so
about dream jobs.
yeah, but yeah, so I just wanted to kind of point this out. So I think these are some good plays. Now, I will say this, that can happen today or tomorrow, right? Let's look at the
Yeah,
ones for this
it could
week.
happen any moment in time. We don't know.
Yeah. So now I'm gonna go 4-1. Let's go to 4-1. And let's look at uh, yeah, it's not a lot of volume. So the fact, this is what I want you to understand, though, KD. The
Hmm.
fact that 319,
Yeah.
you got all these people in there for this strike and this expert. Now, what I want to do, let me look at unusual options activity because unusual options activity will tell me if it's one or two people that's doing this shit. You know what I'm saying? As opposed to that being literally a whole lot of open interest and, because where is it? Okay, unusual, that's volume, my bad. I'm looking for unusual options activity right there. Give me that one, right? I'm gonna post this in the chat too. I'm recording this. It's just this part right here, so people can kind of see what's going on. See what's going on around here. So these are the plays that had. These are the damn. So M is on here too, Katie. You still in that M play?
Which
Oh
one?
no, it's a put. You had a put on it. But look at this real quick on for Macy's. I can see why this would be one for look. Somebody got the Macy's $23 strike call option for that expired 4/16. They bought 12K of it, right?
Yeah.
And I wonder what's going on. Let me see. Why would they pay? How much they paid for it? Yeah, 20. They paid 20 for that. So that call, the 23 call, and they paid. Damn, why would they pay? Oh, is that really what it is for that call? Those Macy's plays really that expensive?
Because it broke a resistance. Well, it broke it last week and it broke it today. So people are probably seeing more upside in the future.
I know, but I'm just saying, like for Macy's to be, he
Yeah,
bought.
it's a little overpriced. So
Oh, it was 416. Okay, the 416 play. I'm like, what the hell? But they actually got it priced. Oh, I see what they did. Oh, they priced it for they priced it for the actual price. I don't know, that don't look right to me. Why is this price this price?
That was the price of the stock when he bought it.
Oh, gotcha. Yeah, I'm thinking, you know what, I was looking at it wrong. I'm thinking it's the auction. Here's the auction price over here. The ask was $113. Okay, that's what it was. All right, that makes more sense. I was just trying to see what he paid for. And yeah, I like what I'm seeing. So pretty much for that, and the reason this is an unusual options play is because he bought that many of them. Let's see, he paid 113 for second 113 times 12. So he paid $1.3 million for that play. So somebody think Macy's gonna go up, you know, and they bought that 23 car. So I mean, that ain't that far to go though. They paid 1.3 million for it. But I don't know. That's why that showed up there. Another one that's important that I see on here. That's what I was talking to y'all about earlier. This Facebook one. Somebody bought that 310, for 423 for the 423 expiry, and that's interesting though. But they bought that 310 strike, and yeah, I think that was interesting. I mean, I think Facebook gonna move up. It's gonna continue to move. I keep seeing a whole lot of United Airlines in here. I keep seeing a lot.
Them airlines is something else, man.
Yeah, I'm seeing a lot of them in here. I don't really pay American Airlines that I don't play that mine too much because it's not really my thing. But y'all still got your X plays?
No, I don't.
Oh, I got out of some of them, but I still got some X plays though. I got out the ones that expired this week. I got out last week. The ones that expired April, I'm still holding those. Yeah. But yeah, pretty much, man. So this unusual options activity, I'll be looking at and change the change. Another thing that I'll be looking at that'd be really, really good too. You can look at the highest implied volatility. That's how you find those smoking hot plays, right? That don't nobody know about yet. There you go. Yo, oh my God. Sheesh. Hey, Jamal, you see this, bro? Gotta be on here. He gotta be on here, man.
What you looking at?
So I just said, let me check the highest implied volatility options, right? And all of them GME puts. Like they just stacked up here on their own, bro. The 228 GME puts. Crazy implied volatility on these.
Strikes $10, $20, $60. Damn.
Mm-hmm.
Yo, they in there
I didn't even pay
crazy.
attention to that. So the fact that, look, a lot of people got this one. You know, this is the one I got. I've been holding 50 and 100 for a minute. So, but yeah, I know you got the 10 too. But what I'm saying is, think about it. GME don't got to get down to $10 for you to see substantial profit, bro.
Nah, at all.
If that shit go down to like 100, you're gonna see a nice substantial profit tomorrow.
Oh yeah, and I got them lined up to dump at certain periods too.
Mm-hmm. I'm just looking at the expiries on these. Like all of these are for the 16.
Yeah,
bro.
I'm about to get paid on them GME.
But look, bro, all of these are for the 16. So, well, a lot of them are for the 16. So what I'm gonna do, and I already know me. There's no way. I've been into I lost. Now, my carry, you know, I lost some money on GME puts because we got some of them too early, and then that crazy shit happened, and we really couldn't do much, right? But my thing is the 2, 3, and I'll say the $800 that I lost, on 2 different plays from them being not being long enough, and then the 2 that I have now, I think if I get one more, I'll be fine.
Load it up.
Now, the reason I'm saying no, because one of them plays, man, that's worth like that's $4,800, one play. So I'm like, all I got to do is be right on one of them. And I just feel like I'm going to be there. And then, look, some idiot did this. Now, I ain't saying he's an idiot, but somebody bought this car for the same, they bought an 800 car. Because that's probably the highest one that you can get. So somebody just bought this with a STEMI.
Oh, and that's new too, because that wasn't there earlier. The you couldn't buy calls past like 450 past like March 26th. No, I'm saying the calls, because when they started running GME up, they added them calls over 450. They wasn't there originally.
Right.
So they had only originally added them out until March 26th. They stopped at 450 after that.
I see what I'm saying.
The fact that he can even buy an 800 call for April means that they added more today.
Gotcha. No, that makes sense. That makes sense. So that means you must have been trying to buy some.
No, but I've been just watching it.
But no, I'm looking at some. I like to look at the unusual, the highest implied volatility, because it tells a story, the plays with the highest implied volatility. So that means it's an expected change for this particular strike is expected to happen. So that means for it to be 441.9% in implied volatility for this, that means, Jamal, they're expected for this $10 strike. Now, keep in mind, for GME to be all the way at 200 and something right now, right? And for the $10 strike for this particular time frame has 441% in implied volatility. That means that a violent change is expected to happen. So that's crazy. You know what I'm saying? That's a good thing. And then the thing is, you got 300 and you got 30K and open interest. So it's like let's say if they were people or something, you feel me? You got that's how many options somebody sitting in there with, and that ain't just one person. You get what I'm saying? It's just a lot of people in there in that particular play. Now it's even more people in the $10 strike than it is in the $8 and the $50 strike, which is crazy. It's more people in the $20 strike for the puts than it is that are in the 50. There's more people, you know what I mean? So in the $40 strike, than it is in the 50. So that's crazy. But nah, not necessarily, because then you see here's another 50 put right here. You got that 50 put, you got that one, you got 50 put right here. Somebody went ham and got this call though. I'm just tripping off that one, but that's a $300 call. That's not too far fetched. Because it moves up and down.
Something with them puts, man.
Well, this is the thing. I'm gonna tell you. The first time when everybody was afraid of everything that was going on with GME, I told myself, I said, bro, let me get a put, but it's gonna be a put that doesn't expire until April. That's what I said. I didn't get it, and I regretted it, man. I was watching how people were printing off them puts. I'm like, if I'm ever put in a situation where I can do this again, I'm gonna make sure I'm ready. And this time I just kept doing it, but stuff started happening and it just started moving sideways. If I had a STEMI, I'd put the whole thing on QS. I thought I was gonna say puts on GME. But yeah, man, for real, man, I just feel like the way it was moving, and I'm looking at the implied volatility on this E-bond call, this $15 strike for 416, my Kira. That's a lot of open interest in there. That's unless you're big. But then,
yes, that's definitely my baby.
But we came here for TLRY, right? So TLRY, if you look here, $80 call, 416. It's a substantial amount of open interest in there, and implied volatility is pretty high on it. But yeah, something that's important that I just want to point out though, a lot of these puts that just got here today, right? All these puts got here today for GME. A list of puts. Matter of fact, let me put them in order by symbol. so we can see this, because I want y'all to see something real quick. Then we're gonna jump off of here. But if you look at all of these GME puts, they all just got here today, and most of them are for 416, 4 So smart money knows something. And I'm telling you, every time I don't listen to smart money, I regret it. There's no way I'm not doubling down on those puts, man. It is over for GME. Now I'm gonna go back to the chart because I want to show y'all something real quick. And then we going, yeah, but I gotta show y'all this, right? Look at this chart, man. GME never dies like this. It's dead, bro. It's dead. It's dead. The volume is it's done, man. It's like desolate in this motherfucker. Look, so if we look at the 30-minute, then go over to the 1 hour, they never been this consistent on each time frame, because it's so much implied volatility and so much volume, right? So even if you look like on, I think it was earlier today, 9 point something million in volume in 4 hours earlier, but then it dropped to like 5.8. But it was the sentiment was bearish though. Go down to the hour chart. I mean the daily chart. This was the most telling for me though, because this was the high. We getting higher lows, because this doji candle right here, it still ended up being a bearish candle, and then we haven't been able to get higher than it since. You get what I'm saying? And the reason this candle was bearish is because, you know, green candles close at the top. They start open at the bottom and they close at the top. Red candles open at the top and close at the bottom. So this candle closed going down. It pulled it all the way down. And then from there, and this is a daily chart. So each candle represents a day of price action. And then look at this one on Friday, and then this one today. This is crazy right here, this candle. And for it to close bearish, that means the whole day it opened up the top and it was able to move all the way down today. Now, what they was trying to do, I don't know, two things could be happening, but GME got earnings coming up. That's crazy. I didn't even really see this, right? 3 of her earnings call on 3/23. It's not going to mean anything. They're not going to beat earnings, right? So, but it's so crazy how it's really 3 months since that shit happened. When the short squeeze happened, they had earnings and they got trashed in earnings, and then the short squeeze happened, and then that happened. I mean, 3 months ago. That's crazy. It don't seem like that long. Yeah. So, but yeah, so this is the daily chart, man. And now I'm just going back here, and after hour, man, it's just, this is crazy, because it's one thing to see GameStop have a strong violent candle like this, bearish candle that pull back like this, but it always violently shoots back up, and then next thing you know, it's either moving sideways or you don't know what buyers and sellers are doing. But today, which is crazy, it tried to rally up a little bit, then it pulled back, rally, pull back. So this is a downtrend. It's clearly a downtrend. So I don't know. I'm excited about what I'm seeing. They tried to fight it here. This was their last hurrah. It's a wrap. Now you see this candle after hours, because this gray line is where after hours start, the market close. They trying to play, but it's nothing substantial though. So I don't know. I mean, I don't know if I'm trying to convince the market or not of what's going to happen. QS pulled back after hours down to this 60, but you see it's back up above that Bollinger Band, and it's doing what it needs to do. And I think it's going to hold up there. Either way, those plays going to be good, I feel. And especially with SPY like this, man, I think we got a good tomorrow at least out of the market. And I'm liking what I'm seeing from MJ after hours too. But yeah, I'm not really sure about TLRY, but I do feel like the open interest and volume for this week for those plays, you know, is telling a solid story of what's to come this week, you know. So I feel like the people who got those short plays this week, they really bullish on it and feel some ways about it. So yeah, that's all I had.